Hey, everybody, Economic Ninja here. I got a story out of China dealing with their real estate catastrophe that's happening right now. And it was commercial mortgage-backed securities. Now it looks like it's moving into residential. Very interesting story. And this is, again, on the heels of the bank runs that are happening and the protests that are happening right now. It says right here, I'm going to link to the story below. It's entitled China on the Verge of Violent Debt Jubilee as Disgruntled Homebuyers Refuse to Pay Their Mortgages. It says here, as Bloomberg reports overnight, a rapidly increasing number of disgruntled Chinese homebuyers are refusing to pay mortgages for unfinished construction projects, exacerbating the country's real estate woes and stoking fears that the crisis will spread to the wider financial system as countless mortgages default. It also goes on to say, according to researcher China Real Estate Information, homebuyers have stopped mortgage payments on at least 100 projects in more than 50 cities as of Wednesday, up from 58 projects on Tuesday and only 28 on Monday, according to Jefferies Financial Group. That is fastly growing. So this is definitely a developing story. I cannot wait to figure out what happens a week from now. So it goes on to say the names on the list doubled every day in the past 3 days. Chen wrote in a note published Thursday. The incident would dampen buyer sentiment, especially for pre-sold products offered by private developers, given the higher risk on delivery and weigh on the gradual sales recovery. Let me take a quick break here and say that, yes, as these numbers are getting published and they're getting shared across the media, more and more people in China may become emboldened to stop paying their mortgage, and this can grow out of control so fast that your head would spin. All right, let's get back. Now it says, what's behind the grassroots movement to halt mortgage payments altogether? Negative equity. It says, analysts believe that the drop in home values may be another driver for the refusal to meet mortgage payments. Investors are concerned about the spread of mortgage payments snubs to buyers simply due to lower property prices and the impact on property sales. And that's a quote from Chen. Let me stop again. I've been talking about this phenomenon that happened during the Great Recession, where people literally walked away from their homes, not because they couldn't pay their homes. I personally knew people that walked away from their homes because they were so short-minded. And I say that as an insult to people that would do this. That say, why would I pay this mortgage when the house isn't worth this much? That exact mentality is about to come back to America. You just need to give it another 15, 20% drop in home prices and watch what happens. Your head will spin. As a matter of fact, at 10% of homes dropping, people start to really weigh the benefits of holding on to the house because they can't look at the future. They can't think the next cycle or that, oh, my payment isn't going to change. I don't want to dive into a booming rental market, right? Rentals are already booming and they're going to get worse as people walk away from their homes and start to try and find a rental, right? They can't look past how their credit's going to be destroyed and it's going to take a certain amount of time to be able to build that back up, right? All they care about is their price. And this is what's happening right now as we speak in the auto loan market, where people are going, I can't afford this $700 a month payment. And on top of that, the car is dropping in value now. I'm seeing it all over the news. So I'm going to walk away. All right, let's get back to the story here. The crisis engulfing Chinese developers is reaching a new phase with a debt sell-off expanding to firms once deemed safe from the cash crunch, including investment grade names such as Country Garden Holdings, the largest builder by sales. Now, we have covered Country Garden Holdings on this channel and how they are dealing with a massive amount of CMBS defaults, and they're a struggling company in China. And the problem is, if this movement, I'm telling you right now, if this movement picks up and doubles again in the next day or two, and then doubles again, and we see it like, let's say 10x, the amount of people that have stopped paying their mortgages in the next week, we got ourselves one heck of a real estate crisis in China. And again, I want to explain to people that just because you're in the United States or the UK, you think you're safe from this, you're not. Because just like we showed with Evergrande, a lot of investors in America, or especially pension funds, are holding debt by these large Chinese real estate conglomerates. like Evergrande, Country Garden, and so on. All right. Now it says right here that payment refusals, which come at a time when China's economy is set to post what may be a negative GDP print to the latest economic slowdown over Xi's catastrophic zero policies, underscore how the storm engulfing China's property sector is now affecting hundreds of thousands of average citizens, posting a threat to social stability ahead of the Communist Party Congress later this year. Chinese banks are already grappling with changes from liquidity stress among developers, now also have to brace for home buyer defaults. And I want to share again, home buyers are the big one. When a government loses the home buyer, the positive sentiment in home buyer sentiment, then they've got issues, because most people's wealth are wrapped up into the value of their home. It's either perceived value or real value, but that is wrapped up. Most people, their greatest asset in their life is their home, which is sad. It shouldn't be. It is a liability, because it doesn't make any money until you borrow against it and take the money out and you do something with it, or you sell it and take the profit and walk away. It is not an asset. It is a liability. People should be owning assets. Real estate can be an asset, but only if you allow somebody else to pay the bills for you and you walk away with a profit each month. That's an asset. So you can see how this could get really big really fast. And in a day and age where we're covering how the Fed is aggressively raising rates, Canada just came out with a 1%, 100 basis point raise, which is a lot more than a lot of people expected. Around the world, countries are going to continually have to raise their interest rates, which are going to put such an amazing amount of pressure on consumers, including the mortgage industry. So anyway, I thank you so much for watching. I'm going to link this below. Again, guys, remind you about the silver giveaway. I'll put a link to that both in the comment section and in the description. And I hope you guys have an awesome day. That being said, the Economic Ninja is out.